Silver's price did not do much today, but because of its odd behavior, it was still not a slow news day. I'll explain why and how as we explore. That's right, silver's price is up marginally. In fact, it's just up over a half a percentage point. Moments before the markets close, this is what's going on with silver. It is back above $38 an ounce again, even in the bid price. And you know, I've been saying that around this area, if we can hold on to 38, we're doing good. Even if it just stays in this area for a while, we're solidifying support, and we're back to that again. But I think what happened today very well could lead to a new rally for silver. That's right, I'm saying that even before the summer is over. But first, it's up 0.6% now, up 23 cents to $38.18. And our first clue is what gold did today. That's right, this lovely metal right here. It is actually down slightly today. In fact, it's almost exactly in the opposite direction. It is down $9.30. 0.28% drop for gold today, settling in before the markets close here at $3,339 an ounce. By the way, those threes in a row have been kind of the area where we've been seeing gold hover. It can't seem to kind of break above too much of that before settling back down this way, consolidation back down in this direction. And that's what we're seeing here. Platinum is up $12, up 0.9%, and palladium is down $5. So it's a mixed bag there. So it's odd behavior really for all the metals in a sense, but especially silver. And before I get into exactly what's going on there, well, I want to remind you of channel sponsor Summit Metals. They have got a great selection of silver and gold products, bullion products, but also some collectible silver as well. Check that out over on their website at summitmetals.com. Experience their great customer service and elevate your wealth with Summit Metals. Now, Kitco News is reporting that gold prices are slightly down and silver prices are firming up near and going up a bit. The marketplace is focusing on an important central bank meeting in the western United States. That's right. That began today at Jackson Hole, Wyoming. Stock and financial markets have been quieter so far this week ahead of the annual Jackson Hole Fed Symposium that moved into full swing and is hosted by the Kansas City Federal Reserve. Fed Chairman Jerome Powell speaks on Friday morning and is expected to update the Fed's monetary policy framework. And so far, gold and silver are mixed, the most popular of precious metals, about what's going to be the outcome of that speech, perhaps. But there's something else at play I'm going to get to in a moment. Powell's speech will be the economic highlight of the week for the marketplace and could provide a new perspective on how much FOMC support there is to lower U.S. interest rates in September. Yes, indeed. And that is something we've been tracking as well here, too. We like to look at the Fed Watch tool. A lot of us here to gauge what the consensus is on what the Federal Reserve is going to do at their meetings. And right now, we're continuing to see it drop, actually. That's right. Now, more and more people are thinking that the Federal Reserve may leave rates unchanged. That's right. Growing momentum for that. 26.4% believe that now. This is actually surprising to me that we're seeing that. And that is putting pressure on gold, but not silver. And also, 73.6% believe they're going to lower rates. Now, I still believe they're going to lower rates in September. In fact, I've already seen one of my bank accounts, for savings accounts, already pull back in terms of its very, very low savings rate from my little money market account, small little account I've got there. They're earning very little interest, and it's gone down. So I think they're going to still lower rates. But I tell you what, this is a shock and surprise to me that the Federal Reserve is now the consensus from the probabilities. Now the target rate is going to remain the same. In other words, a continued pause. This is quite intriguing. But that's not the big kicker here. I'm going to get to that in a moment. The latest FOMC minutes that was out Wednesday afternoon showed most Federal Reserve officials believe the risk to problematic inflation outweighs concerns over the U.S. labor market at their meeting that they had last month. As trade tariffs fueled a growing divide within the Fed's rate-setting committee, a majority of the 18 policymakers in attendance judged the upside risk to inflation as the greater of these two risks, according to the minutes from the July 29th through 30th FOMC meeting. Several FOMC members emphasized that the U.S. inflation has exceeded 2% for an extended period, and that has increased the risk of longer-term inflation expectations becoming unanchored to the event of drawn-out effects of higher tariffs on inflation. And now remember, tariffs do not cause inflation. Taxes, and by the way, a lot of people are shy away from calling tariffs taxes, but really that's what they are. They are taxes. There's no question about it. But taxes don't cause inflation, folks. It is the printing of these by the Federal Reserve that causes it. And why does the Federal Reserve do that? Well, they're doing that even without some of the government spending that's going on, but primarily because of increased government spending. We're spending beyond our means. We should not be doing that as a government. But of course, many Americans also spend beyond their means too. But just because Americans spend beyond their means does not mean that inflation is in effect, because we can't print money. Neither can local governments, neither can state governments. But both those entities, a lot of times, are getting some pay from the federal government. They're sending subsidies to these states, especially the states that are in trouble with a lot of spending and a lot of these social programs. And I don't think that the federal government should be in the business of funding social programs and experimentation. But that's another story here. Now, the other thing, the big draw here, what is so strange about what's happening with silver today, and by the way, it's strange, but it has been happening more lately, and that is that the silver is reacting in the exact opposite direction, sending a middle finger to the strength of the dollar, which has increased right now. The strength of the dollar is up notably today. It is up 0.44% to 98.66. That's right, getting closer to that 99 and 100 level where we saw it before. And silver is bucking the trend. It is defying the logic of the dollar strength. And it is being its own creature here today. And I think this could be a little bit of evidence that we could be in the midst of another rally. Now, what would another rally mean? I don't think that means that silver's going to shoot up to $50 an ounce before the end of the year. I think it means that we could see silver push to 40. I think that is quite possible that we may see that, especially if we see more of these where it's going in the exact opposite direction of gold, because there's an opportunity here, and it goes in the exact opposite direction of the dollar. That's right. That is a good sign, a very good sign indeed. So we're going to continue to watch this and see what happens here with silver, and it is remarkable and it is noteworthy, and that's the thing we have to understand with silver. Sometimes it can buck the trends, especially when we see that it acts as a commodity, as an industrial metal, and just as much, if not more so, than as a monetary metal or as a precious metal. And I think that's what we're seeing here today. And the evidence of that also is platinum. Even though palladium has went down, platinum has gone up today. The other metal we like to watch, and you've heard me talk about this before, is copper. Copper has been fairly flat today. So I think that is kind of intriguing to see that copper's not moved a whole lot. Nickel is up slightly, and uranium is up slightly, but all the other metals are pretty flat, the base metals. But we like to watch that as well, too. But silver is its own animal. It's its own creature, in a sense, because it is the most diverse metal on the planet. It has over 10,000 uses. So that is quite intriguing. Now, Swiss gold exports to the United States have surged last month to its highest since March, with shipments of bullion jumping to almost 51 tons in July. And that may be part of the reason why gold is kind of correcting here too. And record bullion exports worth more than $36 billion made up more than 2/3 of Switzerland's trade surplus with the U.S. in the first quarter. The Swiss National Bank argued that outsized gold exports to the United States shouldn't be included when analyzing trade relationships between the two economies. So there's what that is. Now let's take a look at the technicals for silver, because silver's bulls have the overall near-term technical advantage. So even the technical side, this could be another hint and evidence of a new rally. The next upside price objective is closing prices above solid technical resistance at the July high of $39.91. Yeah, that's right. We were 9 cents away from $40 in the futures market. The next downside price objective for the bears is closing prices below solid support at the July low of $36.28. It did not stay there long, folks. Not long at all. First resistance is seen at this week's high of $38.34 and then at $39. And that's still a little bit of a way. Right now, we've got 85 cents left of movement to get to recapture that $39 an ounce. We get there, it's a new time to celebrate for silver's price for sure. Next support is seen at $37.50. We weren't there that long ago, that's for sure. And so we'll see what happens. But an amazing thing to see. So there's your market report today. I like to give you the latest news and analysis in the world of precious metals, but also do videos about other topics with relation to silver as well and gold. So I hope you will consider watching some of those videos as well. It's not always news here, but I do like to give you the latest news as well. So if you enjoy what I do here, press that subscribe button down below and hit the notifications bell. So with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.